Hi, good morning. It's Mary Ellen McGonagle. You're watching the MEM Edge Show. And this is the show where we put you in front of stocks that are poised to outperform the broader markets. And as in prior weeks, we are also going to do quite a bit of work as far as drilling down to not only individual stocks, but bigger picture, broader market, where the strength is in the markets. And then ideally, what I'd like to do today is present to you, show you how you can take advantage of where that particular strength is in the markets once you've gone ahead and identified that. So let's go ahead and get started. Today, as always, we will do a brief overview, take a look at the broader markets. It's really critical. It's important that you have the wind behind your sails, so to speak. You want to make sure that those markets are in a healthy position so that you can then drill down from there. And then, of course, where is the strength? And by strength, I mean we're looking for relative outperformance. We want to be in those areas that are getting better, higher money flows. They are capturing the attention of investors so that you can then, of course, take advantage of that move. And as always, a lot of our work is going to be focused on very recent history, current, with an eye toward expanded and further upside going forward. And that upside can last, of course, as we know, the markets can be a bit as far as volatile, and we see relative outperformance popping up in certain areas, but it is with an eye toward a little bit of a longer term view. We'll get into that as we move forward. And then setups within that strength. And we talked about that. So we have broader industry groups. How do you drill down to uncover those select stocks that are going to really be able to take advantage of that strength? And then if we have time, hopefully the breakout of today, I'll uncover to you one of the stronger stocks that is breaking out today, and definitely one that you would want to have on your radar screen. So let's go ahead and earnings this week. My gosh, I have so much to cover. There are a couple of stocks that earnings season certainly by and large is over with, but there are a few stragglers out there that have yet to report. So let's go ahead and get started. This is the S&P 500. We're using SPX ticker symbol, and this is a daily view. And what I did want to point out to you is last week was certainly tough. Of course, if you were within some of those larger FANG stocks, you may have really felt the pain a little bit. But we can see what I've done is overlaid some simple moving averages. This green line is your 21-day. The red is the 50-day simple moving average. And this is your 200-day simple moving averages. And these are really quite powerful as far as helping you stay on top of the markets. Are they in a confirmed continued uptrend? Are they breaking down? So the 21-day really is quite effective for the S&P. We can see how it has acted as an area of support in the recent past, where the index has been able to pull back and then regain its footing. So last week we did have a pullback. July and August were super strong for the S&P. The S&P was up well over 6% in just those 2 months. So a bit of a period of digestion, if you will, as the index pulls right back to that 21-day simple moving average. The index does remain in a confirmed uptrend. Your simple moving averages are trending upward. I did go ahead and put the stochastics down here. These stochastics are momentum indicators. You want to pay attention to this dash net neutral line, and it was poised to turn negative, and really you can use history as your guide to see how that played out going back historically. But stochastics can be really super powerful in getting you back in, and you can see how it captures that upside movement. So at this juncture, the S&P is fairly flat today, so we do still at this immediate point are still finding support, and the uptrend is in place. So let's go ahead and take a quick look. The Nasdaq has been the really clear-cut leader year to date. A lot of high-tech, high growth technology stocks really on a tear. We've talked about that in prior weeks, a lot of computer software stocks and so forth. So what we're looking at here is a daily view of the Nasdaq. And what I did want to point out to you is, again, the stochastics. We've overlaid those same 10, 50, 200-day simple moving averages. Last week's break, it did break a little bit below that 21-day, and not overly concerned at this juncture. It's been able to do that and recover quite nicely. There was a bit of a pickup in volume last week, however, and that's important to note. That implies that institutions are in there selling. But at this juncture, pointing out to you the stochastics, when they go below this net neutral, break down, and that is identifying these two prior pullback periods. So just keeping an eye on it. We're not overly concerned at this juncture, but it is something worth noting. The pullback, really the most severe, was during this July period. August, we had a very tempered type of a pullback, but as long as it finds support at that upward trending 50-day simple moving average, you are doing just fine. Now let's go ahead over to stockcharts.com, and what I'd like to do is take a look at one of the really more powerful ways that you can get your arms around where the current strength is. And I tell you that because in my work with MEM investment research, I am constantly scanning the markets, looking at charts. I will go through well over 1,000 charts in a given week, particularly over the weekend as I prepare my weekly, bi-weekly newsletter. And as such, I obviously can get a very good sense of where the markets are, where the strength is, and really quite simply, at the end of it, I will go to this and say, wow, I just had to run this screen. But I like to have confirmation rather than, but I will tell you, this is really quite powerful. What we are looking at is called Candle Glance. You can access this from your initial interface page on Stock Charts. And what they are providing you with is a 2-month daily price chart of 12 different indexes. And initially it will be populated already. I've gone ahead and put in ticker symbols for ETFs that are particularly powerful in telling you where the strength is. They are the underlying sector ETFs charts from the S&P 500. So you populate the ETF tickers down below, and then from there you can overlay a given indicator. I like to use the RSI, which is a relative strength, kind of a momentum indicator. And then from there you can sort that descending. So you're going to get strength to weakness immediately. So let me just tell you some of the underlying ticker symbols here. The first one on the upper left is the strongest, and that is healthcare. Healthcare stocks have really done quite well. They are also holding in well. And we are going to really drill down into that healthcare sector as we move forward. I want you to be able to see where that strength is emanating from and really provide you with some sound reasons why healthcare is doing well, and just as importantly, why it should continue to outpace the broader markets. Let's go ahead and move on for now, though, and take a real good look at where the current strength is outside of healthcare. The next ETF I have here, the ticker is HACK, and that's hack. It is for software in cybersecurity. Really specific, but it is something worth noting. There was a stock I covered 2 weeks ago. I did a which stock would you rather own. Those of you, you can take a look at my prior show, and I profiled Palo Alto, PANW, with Checkpoint. Those are two cybersecurity stocks. It's been a fairly strong area in the markets recently, but it's moved up in strength even more. And then the industrials, that's XLI, and the industrial stocks really came into favor last week. They've been kind of on and off. And I'm really hoping we have time, because I want to drill down into these industrial stocks, why they are showing strength and how you can get in front of where the strength is and drill down to a stock. So let's go ahead and move forward from there, because we go into consumer staples, moved forward, consumer cyclicals moved back out of favor. We did see a bit of selling there last week, but technology is down here as one of the weaker of the 12. So last week we did see tech stocks get hit, and a lot of that was the larger Facebook got hit, of course, Twitter, a number of these social media giants, as well as other areas. But certainly there's a lot still going on positively in tech. I'm not so worried about that, but SKYY is that software ETF, and you can see that it did experience quite a bit in the way of weakness. So this is one way to get your arms around really rather quickly where the strength is. So let's go ahead and drill down into healthcare. There are a couple of ways that we are going to be doing that today. I'm going back to my presentation. This is XLV, a bigger chart. It's a weekly view, and you can see that it is and has been in a very clear-cut uptrend. This is a 50-day simple moving average, followed by your 200-day. And you can see that they are very much in an uptrend. Healthcare has been strong. For those of you with stock charts that look at the top advisors corner, I wrote an article about 3+ weeks ago about healthcare, and it really delves into why there is strength there. And I'll review a couple of the points here now. The fact is that healthcare stocks, a lot is going on in the way of drug approvals. Last year, the FDA approved the most in the way of the number of new exciting drugs. It was the most in a decade, and it's not a big number that they actually approve on a given year. Last year it was 46 new drugs, but this year it's shaping up to be even better. We're already outpacing where the drug approval rate was this time last year, and there are a lot of super exciting new developed drugs that are coming into play. And some of that has to do with less regulatory red tape with the FDA. The federal government is pouring more money into research projects, and there's a lot more going on technologically that is enabling these companies to develop these new drugs faster. So it's definitely well-founded. We also have an aging population that is in need of these newer drugs. And then lastly, healthcare stocks can be defensive. We're in a period where tariffs and Trump trade wars are really getting people a little bit unnerved. And healthcare is a space where, regardless of the economy, of these headlines, there is going to be a need for these drugs. Pardon me. So the concept of healthcare continuing to do well makes a lot of sense. Pardon me. I apologize, a little frog there. So there is sound reason. Now let's go ahead and drill down from the broader picture. What I'm showing you here is the Dow Jones US Pharmaceutical Index. And you can see this is that strength in July and August. And what we're looking at here is a saucer type base. I do a lot of work with chart pattern analysis, and we can see that the index, the pharmaceutical index, pardon me, is poised to break out of a base. So it still looks really quite powerful. It is, in essence, digesting this big move. So the overall index is really looking considerably, really quite powerful. So let's go ahead back to stockcharts.com. And what I wanted to do from here is take a look at some of these pharmaceutical stocks. And then what we can do from there is I'll show you a predefined technical scan that's on stock charts that will get you in front of, again, where the strength is in a given sector. So we're focusing now, of course, on healthcare stocks. And so let's go ahead and take a look here at one of the bigger bellwether names. And really, you can drill down into any number of names. But this is Pfizer. PFE is the ticker symbol. And again, this is a look that is very, very similar to that pharmaceutical index that we were just viewing. And so when we are looking at particular individual stocks, I've overlaid, again, similar simple moving averages. The green is your 10, the red is your 50, and the blue is your 200-day simple moving average. Up on top, I have that RSI displayed, and we want this RSI line to be up above this dashed that indicates positive relative strength, which is constructive. And then your MACD, we're looking for crossovers, the black crossing up or below the red, and we can see that it's positioned above this zero. So as long as it's above this zero, you are in good standing. For those of you with a shorter term time frame, this would have gotten you out of the stock during this consolidation phase. But certainly bigger picture, we're in good standing here with Pfizer. And you really can drill down beyond the technical picture. I can tell you that Pfizer has a lung cancer drug that is due to be approved potentially later this month. So in anticipation, the stock is really setting up quite nicely. And really, you can take a look at any number of these larger pharma stocks, and they are going to have a very similar appearance. This is Eli Lilly. It broke out of this flat base last week. They also have actually they have 6 new drugs in their pipeline. Pfizer has over 30 in their pipeline. So you can see that they not only have Eli Lilly this month has a migraine drug that's due to be approved. So they have a lot of vibrancy. There's a lot going on here. Don't be alarmed or fazed by this upward move, because most of these stocks are in essence consolidating and appear poised for another leg up. And so we can look at GSK, again, any number of these larger pharmas. Actually, GSK, I did want to point out to you, is more on the negative. This company, they were just denied a drug recently, and that is something you need to be aware of. The FDA, just because they have an upcoming drug, it's in the pipeline, they're not always going to be approved. And GlaxoSmithKline did just have a disappointment here recently. You can see the stock faltering. I would argue, though, that going into it, the stock didn't look quite as powerful as some of the others, but you do need to be certainly aware that not every drug is going to make its way through the various channels. Now, I talked about, let's go over here and we can take a look at within stockcharts.com, they have predefined technical screens. And this is really another powerful way to get in front of where the strength is in the market. So what I've done here is I've taken Friday's screen for the predefined scans. You can access them from the initial interface page on Stock Charts. And I'm taking you to stocks that hit a new one-year high, 52-week high on the NYSE, and this was on Friday. So then what you want to do, once you have identified where the strength is in the markets, you can then sort this screen by industry grouping. So let's go ahead and drill down. We're looking for healthcare stocks. We know that it has been and continues to look to be a strong group. So as we drill down, take a look here at this nice grouping of stocks within the healthcare providers space. So we're getting a lot of information here. First of all, as a stock hits a new one-year high in price, that is very bullish. And it can be, as long as you also are getting sound fundamental backing as well. But a one-year high in price is telling you that the stock does not have what's called overhead supply. It does not have buyers that bought within the last year that are waiting for that stock to get back to their price so they can sell. So in other words, the stock is freer to advance higher. So within that, let's take a look at some of these healthcare providers that are hitting this screen. And these have been hitting the screens, but go ahead and take a look for instance, at Anthem. And I'll give you a little bit of background as to why. It looks to be they are slipping a bit today because they appear to have gotten a bit extended. But this is a daily price chart of ANTM, Anthem. And what I wanted to point out to you here is that the stock did break out last week. We can quickly pull up a weekly chart. But these healthcare providers are really having a lot in the way of strength, and it's twofold. number one, it is because as far as the number of people that are signing up for insurance, we're seeing unemployment now at a low. It's actually at a 19-year low. So unemployment, as new employees continue to become employed, their companies are, of course, signing them up for insurance. That's one particular reason. The other is the aging population. A lot of baby boomers are now retiring, and as such, they are signing up for Medicaid programs, and all of that is lending to positive as far as growth prospects for these healthcare providers. So again, pointing out to you, once you've identified an area within the markets, how can you then determine which areas, and really when you see a number of stocks within a given sector hitting new 1-year high, that is telling you that it's not really just company specific. It is really a dynamic that's in place that's propelling any number of these stocks. Now, this, I'm thinking I went back, so we're getting a look at today. So sorting that by sector, we can see Anthem is up here, Eli Lilly, Molina is another healthcare provider. So all of these are stocks that you can, at the very least, take a closer look at. The other ranking that's really quite powerful within stock charts is this scooter, and this is going to be primarily technical indicators as far as the driving force, but the higher the number, the better. And this is another screening where I'm going through stocks throughout the week and I'm uncovering these super strong, attractive stocks. And really all I had to do was come over here and hit the scooter, because they're all going to pop up here, up at this forefront here. These are stocks that are technologically sound. We looked at Eli Lilly. This is another healthcare provider, Centene, and so forth. So that is within healthcare. Now let's go ahead back, because there's another very recently vibrant in August area of healthcare. Some people are not inclined to invest in, but what I'm showing you here is Canopy Growth, and that's a marijuana stock. And before we get into that, I am going to go back to stockcharts.com and review with you some of these marijuana stocks that have really, they've had rather parabolic moves. There's a lot going on, certainly with Canada, in the sense that they have their recreational marijuana usage is going to be green-lighted in October. So there's a lot of excitement leading up into that. But there's also been a lot of activity where tobacco and alcohol companies are going in and partnering with these marijuana distributors, growers. And so there is a lot of excitement going on around these stocks. So we're looking at one, CRON, Kronos. And this is, they just signed a deal with a large organization they're going to create what are called, well, they're products that don't have that high, if you will, but they have the medicinal benefits. So let's take a look at another one in this, because I just want to emphasize to you what's been going on. This is Afria and APHQF. You can see this parabolic move, but they are in confirmed uptrends. So for those of you that are more into faster growing, they do certainly have risk inherent with them, but they also appear to have reward possibilities in here. So this is Canna Royalty, CNNRF. They are US based. So when you see these big moves here, this is taking us back about 2 weeks after a pullback to that 200-day simple moving average. It does appear to be digesting, perhaps consolidating here, being poised potentially for another leg up. Let's take a look at, okay, that's not, but Tilray is another one that is in this space, and you're not getting quite a good picture in here because it's not quite as liquid. It's a little bit of a newer company. No, that is not being, but again, pointing out to you that there is a lot going on. And so as such, with these faster moving marijuana stocks, let's take a look at one way you can kind of get your arms around whether it is a stock that you want to get involved with. So what I've done here is drilled down beyond that daily and weekly view. We're looking at a 15-minute chart of canopy growth, CGC. You can use those same overlays as far as your RSI. This is a 15-minute price chart. So you can see it's really quite volatile. You're not getting that smooth look, but you can use it. Does look poised. This is as Friday's closed to potentially turn positive again here. Now we're looking at a 1 hour price chart. And some of you may not be as active in your investing, but for those of you that are, this is a gap up related to earnings. And this is taking us back to August 15th. The stock gapped up. And you can note here on that 1 hour chart that it had a period of consolidation following that gap up. But as long as your RSI stays above this dashed line, you are generally in a very confirmed uptrend. Your MACD had a positive crossover into positive territory. So your 1 hour chart would have kept you in this stock for about 3 weeks. Really nice, significant move here. And then you can drill down and actually drill out even further. This is a daily price chart of CGC, and this speaks certainly more to my heart, if you will. I tend to use daily and even weekly price charts, but you can see those very same indicators can get you into when the RSI turns positive. This is that gap up on earnings. The RSI turns positive, and really this is a 10-day simple moving average would keep you in this stock. It still appears to be in an uptrend. Very quickly, because we are running out of time, I wanted to take a look at the industrials, and this is a very interesting as far as a move into these stocks, because it is a sound move. Last week, this is a weekly chart, and you can see that it is continuing to form the right side of the base. Unlike healthcare, which has hit a new high and is charging to new highs, industrials have ebbed and flowed because they are caught in the web of the tariff tensions. So what I did want to point out to you is we've talked about industrials. Let's go down to another preset screen here, go to sector summary. And the industrials are carrying on, if you will. That move into that group is still developing. So it's from here we can click on to industrial sector fund. Into that, and it provides you with these sub groupings, and this is ranked by performance today. This is something that I talked about in my weekly newsletter that went out yesterday, the fact that the move into trucking stocks. Now, trucking stocks don't sound exciting, but they are at this moment, at this point in time, because we are at a period of an expanding economy. The consumer confidence is at an 18-year high. Consumer spending is very high. So with that, and also corporate spending, because of the robust corporate companies are growing, these individuals as well as corporations, the purchasing that they're doing, their products need to be transported. So you will see these trucking stocks are really doing quite well. What you can do from here is just go ahead and put your cursor on top of that ticker symbol, and it provides you with a view of that individual stock. So is it hitting a new high or not? So for instance, this is Landstar, LSTR. And so each of these stocks are going to have their own dynamics. But again, I like to use these simple moving averages with these other technical overlays. And I do need to leave it at that. Happy trading. Anyone with questions, MEM investmentresearch.com.